Hey everybody, welcome back to the channel. Appreciate you tuning in as always. I know it's been about 2 weeks. I try to do at least, one video or two videos a month now, just to, make it more simpler that way. Try to teach you all how to stay on plays longer versus, day trading plays and getting in and out of stocks. So that's the whole point of me, trying to do at least two a month now versus doing one every week. Just to focus more, like I said, just to focus on the stock that we talk about. That way you can at least look at that stock and learn how to look at the stock more than like a week or two, and try to trade and get in and out. Because I would say right now, looking at this market, the market's pretty up and down. Definitely inflation is a scare for a lot of people. So me personally, like I always tell people, don't try to invest too much, or any money that you're willing to lose, or you're not willing to lose, I should say. That way you don't have to worry about the market was to drop, stocks to go down, things like that. This past week, the market was not good at all. I know a lot of people just was in certain stocks or in, certain tech stocks, things like that, and just went downhill from there. That's why I always say diversify your account. Don't just be in one stock or one type of industry, be in multiple industries. That way, if one industry's down, the other industry's up, it kind of evens out, gives you, keeps your portfolio, performing well. That way, like I always say, you don't have to worry about losing too much money. On this episode, I definitely wanted to focus on a couple of things. For me, I call it my best trade ever. The way I was able to fluctuate, get in and out of this trade. And then another thing I wanted to focus on, just circle back around on the crypto world. What's going on there? 'Cause I know a lot of people always ask me, as far as crypto, what some of the, cryptos that I'm interested in. What do I see moving forward for crypto, things like that. And then, like I said, the market. I want to touch on the market in this short segment this week. So, like I said, just to start back off with the market, I'm looking ahead, just seeing how things are happening. I'm not too happy about the market. I would say we use the word happy just because the market, like I said, is very up and down, up and down. Last week it was very down. So I try to focus on a group of stocks, good three or four stocks when the market's like this versus being very diverse and being in all types of, having my foot in tech or having my foot in bio, having my foot in, future innovative type products or EVs, things like that. The market is just going up and down recently. So you just don't know what to do, or, you don't want to be too spread out to where, you can get affected, hit in three areas and you only win in two, right? So that means you're down for the week. So that's why I try to focus on plays that I have good intel on, something that I know is either going to jump. I can go heavy into it, get a couple of thousand shares, let it jump up, make my money and get out. Or it's more something that, I'm building, right? So that's that type of IRA type of play, right? So that's something that you put in your IRA. You don't have to worry about it no more. Just build it over time. You really don't look at it. You just let it add up, add up, add up, whether it goes down or up, the end goal there. So that's what I've been focused on recently these past 2 weeks, just stocks like that. Because like I said, the market is very up and down with inflation coming. You don't know whether that's going to push the market down more or up. Now they're talking about inflation is rising a lot sooner, which, I already suspected that a lot of people that I work with and that actually mentor me and help me, I'm in a group that actually helps me out through a lot of stocks and things like that. We all been talking about it in this group, like, hey, inflation is coming up. Mr. Powell, he downplays inflation a lot, but as we all know, inflation is coming up, and as they just said, inflation, rose quicker than they expected. So now, pretty much, they're looking at, hey, once inflation goes up, stocks are starting to go down because they have to now raise those interest rates, and once those rates go up, just expect stocks to go down, down, down. Certain stocks to go down because behind that. And right now, like I said, they're downplaying it, so they're trying to keep the market thriving. They're trying to make sure the market continues to go. But as they're downplaying it, you have to understand this is your time to get your money out the way, because once they actually let you know, hey, well, now we're raising rates, that's when you're going to start seeing some of those stocks go down and down. And you definitely don't want to be in the way of that train as it's going down. So that's the main thing I wanted to focus on, give you all a heads up on that, because the way I'm seeing things, I'm seeing the market go down more and more. So be very, very cautious of that. A lot of people talk, oh, the market could crash. I don't really see that happen. I don't see the market crashing, but I do see it going down. Because a lot of things, I think we are in a bubble, definitely in the big bubble when it comes to stocks. A lot of things are value higher than they're supposed to be. Even in the crypto world, you're looking at, let's say Dogecoin, right? Or Bitcoin or Ethereum, any of those type of coins, the valuation of them are just so high right now compared to the realistic value of them, right? And once that, comes back down to earth, then you're going to start seeing some of those stocks or cryptos go down to go back to more, real values where they're actually valued at versus right now. A lot of, momentum and things like that driving these valuations up when we all know the stock or the crypto isn't really worth that much right now. So that's something I want you all to, be cautious of, be wary of. Definitely, me, I'm still in the market. Will always be in the market, whether the market goes down or up. It's just how you play it, right? It's two sides to a printer, so you definitely got to be smart when it comes to that. You can play it up, get in the stock, hope for it to rise, or you can play that stock when it goes down, get you some of those put contracts, things like that, get a hedge against some of those stocks. The second thing I want to talk about, like I said, was the trade that I say was my best trade in a while. It was stock ORPH, Orphan. It was a drug type of stock. This past week, they was trying to see if they was going to get FDA approval or not. I think 2 weeks ago, it just jumped up to like $70. Went from like 10 or 5 to 70. And then again, we had a little spike, which I got in before this second spike, which wasn't that big. I got up to like $23, almost $24. Not as big as the previous spike, but it was right before the FDA approval, right? So the whole thing was, is this drug going to get approved for FDA? It can help with ALS, things like that. So that was something major, right? Because this was going to be a major drug. If it was to come, they already have an off-label type of drug, that they use for certain things, that helps with ALS, things like that. But an actual drug that is, meant for this, that can help with this, shows improvement, will be major for the market. It's similar, not as big as Alzheimer's, but just as big as the Alzheimer's that Biogen just got FDA approved a couple of weeks back. So that was something I was looking into. I'm mad I missed the first spike up to 70. But for this one, I looked around to it. It's like around 9, 10 when I was looking at it. So, I want to get into it because I know FDA is coming up. But also, I call this a lotto play because, FDA can deny it, right? So if FDA denies it, this company is all focused on this one drug pipeline. So, it's kind of like a double-edged sword, right? It's 100% lotto play because if they don't get approved, the only drug candidate that they have is now not approved. So now they're already not making revenue because they haven't actually got approved for the drug, has been commercialized. That's all what they're anticipating. And if it doesn't go through, then the company is pretty much downhill until they actually get that drug approved. So that was one of the plays that I played, right? So I got into it like around 10, 11, posted some of those. I only bought 500 at the time. And then I started to get into a heavier, right? So then it's okay, let me see, get into it, start my position. If it drops, get more, cool. It dipped a little bit, got some more. And then that's when I got it, like I said, a couple thousand, get into it, and then you get out, right? So for me, I was into it, started to rise, and went up, went from like 11, 12, 13, I'm happy, right? And halted at 14, shot down a little bit, then shot back up, got all the way up to 23, 24, like I said, in that day. Before the FDA approval, which was good for me, right? So me, personally, like I always tell people, I cashed out some, took all my entire investment out that I originally was in it, and then play with free money. That's the smart thing to do. You play with the free shares that you have left. And at that point, I think I only had like 500 left at this time, 500 shares of it left. So then riding it, had an option. I could have easily got out of it because it got back down, dropped back down to like $16, $15. Could have got out of it before the FDA was announced that day. But it wasn't. I thought the FDA was going to be announced that morning before the market. Actually, was announced after the market, which sucked because the next morning, it was announced like 1 a.m. in that night. So then the next day, it was actually offered, well, not offered, it was presented that they didn't get FDA approved. So that, as you can see, before the market opens up, market already dropped, right? It was a Denmark type of drug. So in Denmark, the market's already open. For us, it was around 1, 2 a.m. that they announced it. In Denmark, it's like around 7 a.m. there because I think they're 6 hours ahead of us. So once they announced it, Denmark, you see the stock automatically drop down, right? For me, at this point, I got like 500 left at like an $11 average. The stock dropped down from like 16 all the way down to $7. So now I'm down $4 per share, right? Major, and for me, because that's down 2,000, right? Just made a good amount, right? You got your 1,000 shares at 11, jumps all the way up to 24. You're good there. You got a good chunk of your money out. So for me, I'm down. So I could have just walked away because I'm positive either way, no matter what, right? I made a big chunk of my initial investment, sold it when it was at 24, dropped down, still kept 500 of them. My average is still like at $11, $12 at this time. But it drops down. So now I'm below my average, right? Still positive. I can walk away, take this little loss with the 500 shares and walk away. But for me, I kind of seen this happen before, so I wanted to play it this type of way. And this is what I'm, want to stress in this episode for you all to do, whether you're in stocks, crypto, whatever the case may be. I saw it drop down, like I said, $4. It dropped $7 total, but for me, I was down $4 per share. Was down to $7. My average was around 11. So now I'm down 2,000 on that right there. So for me, instead of walking away, it was smarter just to pretty much invest more, right? Some of the money I already won from the previous spike on it, I need to invest more to get my average down. So that's what I did. Pretty much invested more, got another 500 shares. So now I'm at 1,000 shares. My average was around $7.80, $8 at this time. And I knew once it has that initial drop, it's going to have a bounce back up, right? Which it did. So it dropped down to 7 and then it bounced back up. I think the highest it got in that day was like 9.50, 9.20. Which I was excited about this past Friday. I was excited about just because, hey, that's what I want. I wanted to get up to that standard. That way, once it reached that $9 and that average down, now I'm no longer down 2,000. I'm positive now. I'm out of it, which that's exactly what I did. Average down, let it jump up, and got out of it. And that's why I call it one of my best trades recently, because I could have easily walked away with the money that I already got from it on the initial spike to 24. Took the 2,000, say, oh, okay, made 10, 11 here, minus 2,000, walk away with 9, right? But at the same time, it's like, why walk around negative at all? When I got money, I can average down. So that's why you always keep money in the bank. And I want to stress that to people. Keep money in the bank so you can average down on anything that you're in. Like I always say, I'm not a financial advisor. This definitely isn't any financial advice whatsoever. And I definitely don't tell people when to buy or sell any stocks. But what I do always say that I do is pretty much, if I know that I'm down, it's, for me, you don't lose until you hit that sell button, right? So you haven't lost or you haven't gained any money until you hit that sell money, whether you're positive or negative. So for me, instead of taking that loss, I prefer to average down, right? Because I know what the stock is going to do. Yes, they did just get the 9 for FDA approval, but they're going to have spikes throughout the day because it's just so fresh, right? And that's exactly what happened. I averaged down, it spiked back up to 9. Now I'm positive again, got out of it and didn't lose any money on the first or the second trade. And that's what I want to stress to you all when you're coming into trading. Look at that, try to, envision that, because don't get me wrong, me investing in, another 500 shares, getting my now at 1,000 shares again, and now I'm at like an 8 something average, 758 average. That stock could have easily kept dropping, right? They just got denied for FDA approval. This is their only drug in their company pipeline. So now the only drug that they got is not FDA approved. They got to go back. They're already saying that they're going to lose at least 117 million in the quarter alone. So it's their operation expense and things like that is shaky at the moment. So it's a risk, right? If I average down, I could go from that $12, $11 average down to 8, and then the stock could drop more all the way down to 5, and now I've lost 2,000 plus another 3,000-4,000, right? But that's all about looking at charts. And that's why I always tell people, get your charts, read the charts, know what you're doing. I didn't go into that blindly saying, oh, I'm gonna average down and then hope it goes back up so I can get out. No, I knew the technicals of it. And that's why I want to always stress to people, learn technicals on stocks, learn the behaviors of stocks. That's why I got in that stock before, because I just saw a week before it spiked up, right? Before the FDA was even near, it spiked up to $70. So that was a behavior of that stock, and that's something that I wanted to get into because I understood, okay, well, we're about 2 days away from FDA. It's going to have another spike, which it did. And that's how you place all stocks. Get into them, get your money out of them, get your initial investment. If it drops, cool, average down if you like. If not, then you can just clean slate and get out of it. But what I always stress for myself is to average down. If I know the stock is going to have a little spike in between, that way I can get out of it, which it did. Like I said, it got up to $9. I was able to get out of it, profit on both trades. And then it continued to drop down. I think it's like around 7 and some change now, which I expected to drop even more. So, but now I'm out of it completely, so I don't have to worry about that. And that's the main thing that I always tell people. Yes, I can go back and play that stock again, or I can play, like I said, a double-sided printer. Go ahead and get a couple of puts on it just because I know it's going to drop some. But for me personally, that stock, I'm leaving it alone. I made my money, made a good chunk of change off of it, was able to learn how to trade a little bit better through it. And that's what I always take away. And that's what I want everybody to take away from this episode. Whenever you're trading stocks, just learn from it, whether you win or lose. It's a learning opportunity. You can learn how to operate, how to trade more stocks in the future, just by, getting in and out, taking chances, doing different things with certain stocks. That way you can learn, okay, for my next stock that I'm in, I saw it previously that it spiked up. I might try it again on this one. They have the same type of catalyst going on. So I'm going to get into it, average down. That way when it spikes back up, I don't lose any money. So that's major. I wanted you all to know about that because I was very excited about that trade. That was a good trade for me, made good money off of it. And it was just a learning lesson as well, more than anything. Forget the money. I learned, a lot just from averaging down again, taking chances, taking the analytics of it, and going from there. And it always pans out every single time. On the final topic of this episode, and it's going to be short, crypto world. I see over the weekend, I think Dodge, they had a NASCAR out there for him. Finally got back out. I think it was been away for like 7 years, they said. And he got out there and finished last, and it actually crashed. And when the car crashed, the actual stock itself crashed as well. Or the crypto, I should say, went down as well. Went down to like 25 cents, I think, or 26 cents. I've been warning people for at least a month and a half now, as you all can go back on my episodes. Crypto, especially those meme coins. I think Mark Cuban, Titan, Titan went from $60, it got up to $60 in a couple of days, all the way back down, and overnight down to less than $1, right? So a lot of people lost millions. I think he lost like 8 million in that it was reported. But that's what I talk about. That's what I'm talking about when I'm saying cryptos and things like that. Be careful of them. There's so many scam artists out here that are in the crypto world, and then not even like meme coins like Dogecoins. Those aren't like scam coins, but at the same time they are meme coins. They're not really they was created as a joke. So you definitely want to be careful when you're investing money in those type of coins. Me personally, I try to only focus on Bitcoin or Ethereum because those are the two major coins out there versus any meme coins. Because I don't really see a long future in those meme coins. Yeah, they have spikes, they have ups and downs, but definitely play it smart if you get into them. Whenever I'm getting any type of a meme coin or anything like that, I try to hit it at its bottom, right? So if it just got down to 25, then that's for me. Okay, that's a low. I want to get into it, let it spike back up, and then get out again. I definitely don't want to hold anything more than 2-3 days, just because the type of crypto it is. I don't want to be in that for too long. So that's why I always stress to people, hey, be cautious when you get into these things, just because they definitely can fail and drop quickly overnight in a heartbeat. So you definitely want to be cautious when you're doing that. Definitely don't get into anything that you don't have to get into. And definitely be cautious when you're getting into these type of cryptos, just because these things do drop. They can go down quickly. You don't want to be caught into it when you're in it at its peak, or even in the middle of its peak, and it drops down quickly. You definitely want to get in and out when you're doing these type of plays. Don't stress it too long. And if you're down, I could say, hey, yeah, average down if you like. But if you're in a meme coin and you're down, be careful because you can average down and it can continue to drop. Like I've been telling people for at least a month and a half now, I don't really see these Dogecoin. I see it having another spike. All meme coins, XRP, any of these type of coins, I see them having, another spike or two in the near future. But after that, I see them going down, especially this summer. Depends on what the Fed says or how they're going to handle cryptocurrency. But then they decide not to actually, regulate it, and it's not actually put onto, any real financial systems, then I see a lot of those meme coins dropping down. And I see a lot of, all cryptos dropping down, going back down to lows, where they was at before. So be very cautious if you're investing in any of those crypto coins. Take your time, do your research, and definitely don't put too much in it. Nothing that you're not willing to lose. Like I always say, even in the stock market, don't put anything that you're not willing to lose. All right, man, I appreciate everybody joining in today. Held you all a little longer than I wanted to. I wanted to be like a 15-minute video. But thank you all for joining. Thank you all for continuing to watch and continuing to share. Any questions, comments you have, drop a comment below. Like I always say, and I definitely try to get to it in the next episode. As always, be wary of who you're investing to and who you listen to. Don't, go on blind out here investing into, like I say, crypto or Doge coins or anything like that, unless you know about it, you do your research. Definitely do your research. Don't listen to any of these new traders or anything like that. Get a couple of sources, learn from them, and go from there. Like I always say, thank you all for joining again. God bless. You all have a great Father's Day. Bye-bye.